Hello, my name is Iain Mant, and I'm a partner in the Securities and Technology Group of Fasken. Welcome to our panel on Gearing to Become Public, the Unknown. Joining me today are Barbara Livingston, a partner in KPMG's accounting advisory practice, Ben Nyland, CEO of Loop Energy, and Dan Blondell, CEO of Nano One Materials. In our panel discussion today, we hope to cover some of the significant issues that should be addressed before you choose to go public, as well as some of the issues and surprises that commonly arise after you become public. Each of our panel members will bring a different perspective to this discussion. We'll try to address questions from the audience during the discussion, and if time permits, at the end of the discussion. Ben Nyland, I'd like to start with you. Can you tell us a bit about yourself and Loop's journey to going public?
Absolutely, and thank you. Really appreciate the opportunity to participate in this. So a little bit of background on Loop. Loop is actually a 20-year-old company that was, up until a few years ago, funded by angel investors, high net worth individuals. Had its first institutional round in the fall of 2019 with Cummins coming in as our first sort of corporate investor, and Cummins invested a second time in the spring of 2020, just as we were all headed into this COVID situation we've been in for the last 18 months. We're a fuel cell company, so we develop fuel cell engines for commercial vehicles, and so it's a pretty capital intensive process. And so we'd always expected that we would go public at some point, but we wanted to do so in a way that really got enough capital into our treasury to sustain ourselves for a significant amount of time. And so post the Cummins second investment, the feeling was that we would want to do one more private round, what we would call a pre-IPO round, to set the stage for a go public transaction. And so we went through a process of vetting various investment banks in preparation for that. We selected National Bank because of their experience in hydrogen and fuel cells, and proceeded to start with a private placement round of $50 million. And partway through that round, National Bank was working in the public markets with different fuel cell companies, realized that, in fact, the timing might be good for us to actually go straight to the public round and raise more capital. And so that's how that happened. Because of the nature of that process, because we weren't necessarily expecting to go public right away, the circumstances were favorable, so we took advantage of it. We encountered a few challenges in terms of our readiness, but the IPO went absolutely fantastically, and we're very glad to be where we are today. So happy to share a little bit more about our experience later, but that's the quick story on how we got here.
Thanks, Ben. And for those of you that might have not picked up on the nuance there, Loop's trajectory to going public was a conventional TSX IPO long-form prospectus offering. Dan Blondell, now Nano One took a slightly different route to going public. Maybe you could talk a little bit about Nano One and how you entered the public markets.
Great. Well, like Loop, we have been around for a while. The company was formed back in Nano One was formed back in 2011, and we were private for a period of a few years. Raised most of our money through our own, actually a broker network. We largely had kind of pros in the space who would kind of bet on Nano One. And again, we always knew that we were going to go public. We'd always structured it that way. And in 2015, the opportunity came available to bring Nano One public through an RTO, or reverse takeover. So we vended ourselves into a company, a shell run by a shell called Dunderave, and renamed the company to Nano One Materials, and kind of really have never looked back since. We had raised about $3 million privately before that, and then subsequently we we raised money on the initial offering, and there were warrants that were taken down. That funded the company for several years until we went out and did a few explicit rounds. And then the company actually uplisted to the TSX just in June of this year. Maybe just from a Nano One perspective, what we do, we are in the energy space, and we are developing technology to improve the way that lithium-ion battery cathode materials are made. The cathode material is one of the electrode materials in the lithium-ion battery that allow lithium and energy to be stored and delivered on a repeated basis. So we're a process technology company, and we are developing sort of innovative processes for license and partnership into the lithium-ion battery space. Excited to be here. Really appreciate the opportunity. Obviously, there's lots more under the hood than what I've just described, so looking forward to getting into the details.
Yeah, thanks, Dan. Barbara Livingston, you work with KPMG and you help an awful lot of companies with their financial reporting compliance matters. Perhaps you could share your thoughts on how you can provide assistance and your observations about the different pathways to going public.
Yeah, thanks. So as you said, unlike Ben and Dan, I'm not with a single clean tech company, but I've worked with companies across a number of sectors, several of which are clean tech or otherwise trying to support the clean revolution, if you will. Even the mining companies I've been working with on IPOs this year are all about the materials that are preparing for different forms of energy in the future. What I've been working on I lead our accounting advisory practice, and we work with lots of companies as they're going through the journey. Have worked with companies this year who either are preparing for or have recently listed on TSXV, TSX, are considering whether their path to public is going to involve acquisition by a US SPAC, for instance, or some other new formed company, spin-out transactions, and so on. Many of which are cross-border, not all of which are cross-border. And what I do is help them navigate the accounting, the auditing, the internal control types of aspects of going public. These are long lead items, and the finance team has a heavy lift during the whole go public journey, along with others in the organization, and that's the lens that I'll bring. Thanks, appreciate being here.
Thanks very much, Barbara. One of the common themes we hear is that no matter which route you take to becoming public, you should be prepared. Now, Ben, I know that in Loop's case, while you always planned to go public, your final decision to go public was one that happened quite quickly as you took advantage of market timing. Maybe you could comment a little bit on your thoughts regarding, the preparation you should undertake and when that should start, and your experience with that as you made your decision to go public.
Yeah, I think there are so many things here. So as I said in the beginning, it was not our expectation that we would be going public at the time that we did, for no other reason other than we wanted to make sure we could raise sufficient capital, and we expected we needed to wait a little bit longer to do that capital raise. And so as a result, we were really well prepared for a private placement. But then there's a lot that needs to happen in an IPO process that we weren't quite ready for. Now, we'd begun to set the stage. So we had a good group in our finance department. Our controller was from PwC's audit group, and so had experience. And so when we realized we needed to suddenly re-audit all of our financials, that was a bit of a surprise. We were already audited, but we needed to be audited to a different level. We did have the team that could run that process. We did have an exceptional investment bank in National Bank who were very capable, understood the sector, had great relationships with the investors who were interested in the sector, and were able to bring us forward. And so this was part of the reason we engaged with them even on the private placement round, as we recognized their connections into the sector. And I have to say, just as a side note for me, as someone who'd been leading a private company, when you're going after private funders, there's a bit of a difference. So I know when we approached VCs, there was often this sense that if they had a portfolio company already in our space, they might not be legitimately interested in us. They may just be more interested in the market intelligence. And so it took me a little bit to realize that doesn't transfer over into this sort of community, where in fact, it's really beneficial to have an investment banking partner that has your competitors as clients, because that means they understand the sector better, they've got good connections to investors who are actually interested in it, and the entire process goes more quickly because the materials get put together faster because of their sector knowledge. The conversations with investors go better because they can help you understand exactly what the investors want to hear. And so that would be my guidance, is really focus on getting the right professionals around the table so that if the opportunity happens, they can mobilize very quickly and really get the job done. And I have to do a call out for Iain on this, because the timing meant that we had to re-audit and make our prospectus over the Christmas holidays last year, and Iain leaned in and got the job done in record time. So making sure we had the right advisors was the key, really, to being ready.
Thanks, Ben. Dan, you've commented before that you think public markets experience is quite critical to success as you go public. Perhaps you could give us your thoughts on getting that experience in hand early on.
Well, I think at Nano One, we benefited really from already kind of having it in our DNA, even as a private company. And we had a CFO, and my business partner came from the public markets as well. And we actually had a significant shareholder base that were largely very public market savvy. So that included not only sort of our retail investors, but also our broker network. So what I believe is that made it very straightforward for us to take us through an RTO. We were estimated at the time, when Ben spoke of kind of record time going public on the TSX. We did this back in 2015. We didn't necessarily do it under favorable market conditions. We needed access to capital at the time, and that was that. That was the timing that we had to put it together in. And it took us, we were estimating 4 months. It took 6, but there's always a lot of sort of details. We felt it was relatively fast to put that together. Fasken's, of course, was very much involved in that, and has been ever since. We get a tremendous amount of value and support from your group, Iain, and we certainly very much appreciate that. But I think what really made the difference is just having having a well-known set of board of directors, investors in the public market space, who brought a loyal, sticky shareholder base to the table, and effective communications to keep those shareholders sticky. Often, an RTO or an IPO is a liquidity event for past investors to get out. In our case, we saw it as an event, a way to sort of bring more eyes to the stock and create a larger, deeper shareholder base. So effective communications and outreach to all of those shareholders played a really important role in launching the next stage in our public markets life. And we have kind of held to that mantra ever since, and believe it's created a very kind of loyal and deep shareholder base, and it's provided a fair amount of liquidity as well, because we've been able to sort of grow that base as we've gone along.
Yeah, thanks, Dan. I find that the difference between the routes you went and the timetable is very interesting. We have been, effectively launching a full IPO and getting the deal done in 2 months, and which when we have clients ask us how long does it you expect it to take for a conventional IPO, we would never tell anyone it would take 2 months. We'd commonly say 3 to 5 months, depending on the circumstances and the preparation needed. And here we have Loop accomplishing that over the holidays in 2 months, and yet at the same time in Nano One's case, it was a more conventional situation where you hoped you'd do it in 4 months, and it took a little bit longer. So I find that counterpoint very interesting, and I think it just serves to let everyone know that you never quite know how the timing's going to work, and that advanced preparation that you can put in place beforehand is going to serve you well. And so maybe we can now transition now and can open it up to each of you. Maybe talk about some of the specific planning decisions you make, particularly around staffing, both before and after you go public. So maybe investor relations is something we hear about. Maybe one of you could kind of comment on your thoughts regarding, building out an IR team, and we can move some of the other important positions.
Well, listen, I'll go first on that. We recognize right away that IR and communications were fundamental, and we certainly in the early days we struggled finding exactly the right IR mix, but we've always had strong communication tools and strong sort of marketing campaigns to reach out to our investor base. We have experimented with a whole bunch of different sort of IR type platforms. How do you outreach to the investment community? And we are constantly juggling and shifting and changing that, because a lot of the marketing mechanisms that are out there for investors or for the IR teams is constantly changing and evolving. Whether that be social media or whatever it might be, you have to kind of keep up with that. So, extremely important to have all that in place and to have effective communication plans in place that does outreach to your shareholders, and so they're sort of sticking with the company. And certainly as lockups come to end and there's free trading shares coming to the market, communication becomes a really big part of that. You want people looking to the future in the company and sticking with it.
Barbara, maybe you could comment on the kind of the financial expertise that is needed both internally and externally through the going public process. I think we
sorry
have
about
you
that.
muted
I was
still.
on mute.
Yeah,
sorry. Appreciate. Sorry about that. Certainly, I think the finance function is one of those that you do want to tool up, and in particular, the CFO function, the financial reporting function as well in advance of going public. So as you see the bridge round coming or a public transaction on the horizon, I think those are important to be in place. And of course, as CFO, and I think the legal function, whether internal or external, very important, especially if you've got a CEO, the visionary, who isn't necessarily public experience, which certainly can happen in this age of innovation. So I think the timing of getting your finance function in place, and in particular your CFO, is really important. I think public company experience in particular, and if there's any form of cross-border element to this, so if the company is incorporated in the US but operated out of here, if you're thinking about investors in both sides, if you have US PE at the table already, very important that there's some cross-border versatility in that function, because you're going to need someone who can navigate the cross-border aspects. When I hear the timelines that you all have been talking about, one of the things that's really obvious is there are many finance function work streams in preparation to an IPO, getting on an accounting basis that's accepted for a public company, which, depending on the facts, will be IFRS or US GAAP, getting your audit to a public company standard, sometimes even requires changing of the audit team, and getting the company, particularly in the case of a TSX example, ready to certify controls shortly after. All of those are quite long lead items, multi-month work streams in their own right. And so getting your team ahead of time and really thinking through, what can I advance before someone's ready to pull the trigger, is really important, because you think about Loop's opportunity to capture the market in very short order wouldn't have been possible, I think, probably, if you hadn't already been on IFRS, as an example. There are lots of things that happen, and you can advance quite a number of them in parallel. I would also add that I think both Ben and Dan's comments about the investors, who are the investors that we're after, and what do our stakeholders, including our current shareholders, need to get out of this, all those things will impact which path you go, whether it's, of those many paths we talked about. And those paths, all your requirements from a financial perspective are highly dependent on which type of offering you'll have and the characteristics of your company before and after. So I would also say getting advisors to the table earlier than later to help you see forward to what your path could look like and what kinds of things will help you advance along that before you have certainty about your transaction is really very, very valuable.
Thanks, Barbara. Board composition on IPO. Now there are some different, technical requirements for your board, audit committee requirements, and independence requirements under securities and stock exchange rules. Maybe I could ask you, Ben. Your experiences with the board composition, both before and after public, and then maybe you could also comment on that as well.
Yeah, absolutely. So we had quite a functional board before we went public, including a representative from Cummins. And so we had what I would consider to be reasonably good governance for a private company heading into the IPO. But certainly there are additional requirements that come along with being a public company. There are specific committees, governance committees that need to be formed, and audit committees. Audit committees require 3 of your board members to be qualified to review financial statements. And so that creates certain dynamics inside the board, which can create a temptation to start growing the board. Because of course, we also want to keep relevant industry experience on the board, as well as that financial capability. And so for us, it wasn't difficult for our existing board to come through and qualify as independent because it was largely independent already. But we did need to add a couple of people, and Cummins also changed their board members. So they'd previously had the vice president of technology, global research and technology, who was more of an industry-focused person. Because we were going public, they put the Cummins controller on the board instead. So again, that brought general business and finance experience, which was invaluable post IPO, but it also diluted a little bit of our industry knowledge. So that's something that post IPO we really needed to work on.
Dan, any thoughts from your end on the board?
Yeah, I would say that we kept our board pretty simple as we became a venture listed company on the TSXV, and really have kept it that way until very recently. As we uplisted to the TSX, we are having to deal with some sort of independence issues, so we need to bring more independence onto the board, and in order to keep it relatively lean, we're also starting to think about building out an advisory board so that the industry expertise is not necessarily on the active board, but more on an advisory board type of a scenario, and that keeps that enables us to put the kind of the independence and the governance and the audit committee and obviously all the nomination and ESG type things that we need on the active board sort of in place, and having good public market industry experience there, and bring and decouples decouples really the advisory capability that we'd get from industry, and then allows us to take it off the board. So it's where we think the really the whole sort of design of our board is going to go in that way. So we're having to do some shifting right now, and in order to obviously to meet the TSX guidelines and also the ISS and Glass Lewis recommendations, and so we want to make sure that we've got all those pieces in place. So we're in a transformation stage right now on our board.
Thanks. Yeah, thanks, Dan. Now, Dan, I think earlier on you mentioned that you had some sticky shareholder base and shareholder alignment. And I'd like to kind of ask each of you. Ben, you had Cummins as a major shareholder, as well as some, a broad shareholder base for money you'd raised over the years. Can you provide us some comments on, the importance of that alignment, the shareholder buy-in to the IPO process, and whether you encountered any surprises on that support as you went down the path?
Well, so we certainly didn't encounter any surprises on the path. I knew that most of our shareholders, with the exception of Cummins, of course, were very interested in some sort of liquidity event. So there would be lots of enthusiasm for that sort of process, and I knew that from talking with them quite a bit. The one thing that did come up that I think is good for companies to be aware of is, especially if you go through this IPO process and others, there's a requirement for the existing shareholders to enter into a lockup agreement. And ideally, if you're in the process of having a private company right now and a relatively small number of shareholders, I would suggest that you consider a shareholder agreement that specifically outlines, in the event of go public, everyone agrees to sign a lockup agreement. We did not have that. And we had hundreds of shareholders because the company had been around for 20 years. And so we were in a situation where we needed to go and get signatures on those documents from people who hadn't yet agreed to do it. Now, they were motivated to support the IPO, and we did get, I believe, 97% of the shareholders to sign that lockup agreement. But it was a lot of effort that could have been taken care of with a shareholder agreement that everybody had agreed to in advance. So that's something that can definitely be done to save time.
Thanks, man. I have a question from the audience here that I think is one probably for both Dan and Ben to comment on. And the question is that they agree that it's important to have sticky shareholders and a good board when you're going public. But the comment is that there's ample funds looking for investment, and there's record venture capital financing occurring right now. And so, is there a compelling reason to stay private for a little bit longer until you achieve a higher technology readiness level? And I think, given that, you're both in a space where you're still commercializing products, or maybe you can kind of comment on how you chose the right time to go public, and whether or not you think there's any advantage in going public sooner or later relative to your technology readiness.
Look, it was access to capital for us, and that was the timing. It had, in 2015 when we did it, there was no venture capital money going into materials, batteries, or anything. So we really had to go to the public markets for that. And the public markets were definitely there to support us. And I think we're certainly very happy with the decision, and we've never looked back, and we've always created value for our shareholders. So in that way, it's worked well for us. But look, if there was access to capital elsewhere through the venture capital markets like you see right now, then yeah, we probably would have stayed private. But that wasn't the situation in 2015.
Yeah, and I would say our situation really was the same. So we needed access to capital. We were looking for significant capital, and while there is some private capital available these days, the public markets were far more receptive to hydrogen and fuel cell investments at the time that we were seeking our capital, and so it's really how we needed to fund our business, and that was the decision. I think it was also extremely helpful for us to have National Bank as our advisors, because they don't have a particular bias in either direction. They have the ability to do private placements, they have the ability to do public transactions, and so we knew that in working with them, we'd land on the best option, and I believe we did.
I'd just like to piggyback on that, if I may. So we've got on the panel two companies who actually made it all the way through the IPO transaction. We're working, and I'm sure you are as well, Iain, with numerous companies who see that as a potential path in the future with varying degrees of confidence on that path. But we've seen some interesting things over the last year in this regard. So one is we certainly have seen, and maybe it's dying off a bit, but an exuberance related to the IPO and the SPAC markets, and companies actually moving forward to think that, yes, I'm going to IPO, when they actually didn't have a compelling underlying reason or story related to the IPO. So maybe they didn't have a compelling need for the proceeds, as an example. Maybe they maybe the IPO path wouldn't have achieved the exit that their private equity investor was looking for. And that really, for some companies, an acquisition path, like a sale path, is as attractive, or perhaps in certain circumstances more attractive. So I think it's really important. I would really echo the importance of understanding everyone's objectives and how important that is to the path. We've seen people go surprisingly far through a surprising amount of time thinking the IPO was the direction they were going, without realizing that their shareholders weren't even fully aligned to that, or that it wasn't really very practicable for that company. And I think Ben's point about having advisors, financial advisors, investment banks who really are not biased and think through the various pathways to private money or public company, or in some cases sale, is super valuable. And I've certainly seen some of our clients say that they felt they were getting a story from some of their advisors that might not have matched reality. So I think all those things are very important. I'd also say that story directly feeds into all the financial matters, even your selection of board that you were talking about a few minutes ago. We've seen quite a number of companies who maybe had shareholders on both sides of the borders post-IPO suddenly realize they're fully subject to a full U.S. securities environment, almost as if they were a U.S. company, even though they're a Canadian company, because maybe they have slightly more U.S. investors, and then their board or management happened to trip over 50% Americans, and suddenly they're subject to the entire U.S. regime as if they were a U.S. company, which can be pretty onerous. Different pathways have different aspects that are more onerous, but I think keeping all of your stakeholders, your counsel, even your auditors or accounting advisor, up to speed on the strategy, including things like governance, where you wouldn't think they'd really care, is actually quite important, because it can affect the trajectory on lots of different work streams.
Thanks. Those are great points, Barbara. Now I'd like to move on to the post-public period. So hopefully all that good preparation you put in place beforehand is now starting to pay dividends, and you're benefiting from that. But I'm sure there's still some further surprises to deal with. And I have a question from Benjamin in the audience, which may be one of those surprises. And he's asking, can someone please comment on the added CEO burden, if any, of running a public company versus when you were private? Now, like seeing Ben smiling there, so I think we'll turn that one over to Ben first.
I love the if any. Yes, there's additional stuff. Look, I'd never. This is my first experience as a public company CEO, so I knew there was going to be additional burden. The reality is that the investors want to know what's going on. So Dan's talked about the IR function. This is a big part of what I'm doing more and more of. Also, as we move more and more into strategy, the executive team becomes even more critical. So, I mean, last week we hired general counsel. If I could go back in time, I would have hired a general counsel before we did our IPO, just because, as Barbara said, having that advice and knowing that all of the compliance issues are well in hand helps you as a CEO sleep better at night and know there aren't going to be any surprises. No matter how good your team is, there's a lot of detail. And so the role really shifts to one of strategy and outward-facing communications primarily. And then, depending on how the market goes, there can be additional pressure there. So Loop was absolutely the beneficiary of enthusiasm in the marketplace around hydrogen and fuel cells. And the other side of that coin is, shortly after we IPO'd, that enthusiasm about the sector, not specifically about Loop, but about the sector, started to go away. And we were part of the sector, and our price came down. And so until you've sat in the seat and dealt with that, you can't really know what that's like. And so it's definitely a different shift, and there's different responsibilities.
Thanks, Ben. Dan, do you have any comments on the change in your role from private to public?
Well, it was a long time ago now, but I would say that probably the single biggest thing is that we, certainly the C-suite and myself, has the amount of time I spend in kind of investor relations and working in the capital markets with banks, doing conferences, speaking to the investor base is a tremendous amount of work. I learn a lot. It's an extremely important part of the role. But as the head of the company, you become the face of the company in that part, and that's what investors and shareholders and whether they're institutional or retail, they want to hear from. They want to hear from the C-suite. They want to hear from the CEO, and so that does chew up quite a bit of time. It's very valuable time. You learn a lot in the process, and it's extremely important for the company. But it's I can't overemphasize how important and how much time that is that becomes as a CEO in a public company.
Thanks, Dan. Now, Barbara, one of the surprises I think many companies experience after they become public is sort of on the compliance and financial side, and the increased burden both financially and from a management perspective. Perhaps you could comment on that.
Yeah, I think there are a number of angles to that. So getting your financials ready for the prospectus helps you understand a fair bit of that, because you realize what the form of the financials needs to be and that kind of thing. I think getting ready to operate with the accuracy and precision and quality on the timelines that a public company has to report on are pretty important. So I think that takes some work and preparation. I would say the other two things I think on the financial area on a post-IPO basis that companies really need to think about, and you're not always going to get the full advice or insight from counsel who might know of the requirements but not know what backs up the requirement, is the area of control. So a company on the TSX, for instance, management has to certify its controls. Generally speaking, it's the year end following the acquisition. And there's quite a lot of work. I remember hearing counsel, US and Canadian counsel not long ago saying, oh, well, yeah, like you have to have controls anyway. But to certify controls, there's actually quite a process that you have to go through to identify all the controls, fill the gaps, and then have someone testing the controls. There's actually a significant compliance aspect to that activity. And while it's post IPO, we find most companies want to get the first part of that done pre-IPO so that there aren't any surprises on the back end. So that's one to think about. The other one I would say catches people by surprise if you're doing acquisitions. Public company in Canada or the US, and depends on your particular fact pattern, what the thresholds are. But if you're acquiring businesses, it's very common for a public company to have to report the audited financial statements of those acquired businesses for periods before they were acquired. So basically, shareholders, the securities commissions and rules have provisions to make sure that information about the totality of the company is on the public record. And so if you undertake an acquisition that's significant to your overall picture on various metrics, you actually are responsible to provide historical audited financial statements, even for the period that they weren't in your house, so to speak. And like what Ben said on getting shareholders to sign up for lockup earlier than later, I think you want to, in thinking through an acquisition, make sure that you're securing access to the information you might have to report, because it may not otherwise be accessible to you. That would be another area of surprise I think people run into as a change in the financial area.
Thanks, Barbara. Now I think we're getting down to our last 5 minutes, and I think we'd like to just tackle one other subject before we get down to your last lessons and advice, and that is that, all of you have experienced some significant fluctuations in stock price for public companies. This has got to be pretty nerve-wracking. Just wondering if you have any advice for the audience as to how to manage that process and as you enter the public markets.
I'll go first on that. We've been at it longer than Ben and Loop, so we've seen many more fluctuations and many more cycles. And I think the important thing is it's all about communications. You're going to have to deal with it. You're going to have to deal with the noise coming in from your investor base. And if you have a large retail base like we do, you tend to see more sort of incoming calls and more nurturing that's required to get everyone kind of over the base. It's amazing how many times people think general trends in the market are that we're driving the general trends in the market up or down, and the reality couldn't often be further from the truth. And so it's important to be able to walk people through that, have a story, have comps, have have an effective open line to your shareholders, so they can not only call in, but you can reach out and speak with them. So look, communication and news releases are extremely important. Look, liquidity is one of the reasons we go into the public markets, and it's great when it's on the way up, and when it's on the way down, it's always difficult. But it also it allows companies like ours with shareholders who are getting a little bit tired to exit, and for new ones to come in. So I think from our perspective, that's often a refreshing thing. Refreshes your shareholder base, and you get new, longer, stickier shareholders in place. But look, outreach and communications is really probably the most important thing during these kinds of fluctuations, up or down. Shareholders want to hear why it's moving.
Yeah, that's great. The only other thing I would say is, we're just focused on the business. So we need to do all of these things. But again, back to what Dan was talking about, CEO's responsibility is outward communication. Really important to have a team that can keep the business moving forward so that the share price doesn't become a distraction and the tail doesn't start wagging the dog. It is going to be what it is. Just need to make sure we're communicating with our investors.
Thanks. Now, we just got a couple minutes left, and like to leave the audience with each of you giving, your single most important piece of advice or lessons for our audience, based on your experience with either going public or advising. Barbara, maybe have you start on this one, 30 seconds.
Yeah, I'll be quick. I would say as soon as you see anything coming down the road, earlier than later, talk to your advisors and figure out what you can move forward painlessly without a lot of waste, which is probably the audit standard, and maybe an accounting standard can actually help cut down months out of your go public timeframe.
Ben?
I could probably be shorter than 30 seconds. It's a team game. You got to make sure you got the right team members. That includes advisors as well as internal executives. Make sure you got the team to execute.
Dan?
Yeah, look, maybe I'll start with a bit of a joke on it, but the biggest surprise is how many shareholders know how to run the business better than the C-suite. That is a common thing, and certainly as you go public, you just have a larger shareholder base. But I think I'll echo what Ben said. It's about team. It's about having public markets DNA and having the IR and having the financial experience and legal access to the legal experience. It's critical to sort of everything we do every day. So,
thank you, Barbara, Ben, Dan. Thanks very much for sharing your insights and thoughts today, and to the audience, thanks very much for attending, and hope you found the session helpful.
Thanks for having us.
Thanks.
Yeah,
pleasure
much
to be here.
appreciated.